Okay, so now we're going to move into the final segment, but it also could be quite a long one, which is just general the corporate activity. Lithium for the past, as long as we've been doing this, there's been lots of deals. Yes, the industry has had to fund itself, but there have been outsiders who have sought to enter the market, not as fast as we would hope, but they have been quite varied. There's been some big oil, big utility, mining, mid-cap mining. We'll talk about a little bit of that. In a stronger for longer environment, quality projects, managements, and companies should be bid higher, right? And we just talked about the market's not pricing into public equities, the price forecast that you have over the next few years. I've seen a bit of a disconnect with some public market valuations and private market valuations. If you look at what Rio paid for Rincon, and then Ganfeng, who usually pays very little, gets really good deals, paid over $950 million for Lithea, which is an earlier stage asset than, let's say, Lithium Americas bought Millennial for. So talk about that. And I also want to bring back and ask you, SQM bought into Kidman. They paid about $130 million. 1 or 2 years later, West Farmers came in and for their half share paid $550 million. Around the same time, Albemarle paid, I don't know, $1.2 billion for Wodgina. You said, that they overpaid. You called it a diversification. So I want to ask you if you still believe that. And then if you look at Ganfeng and Lithea, do you think they're overpaying? And do you think that's a diversification?
Yeah, I'm still going to say it's diversification. If you just because the market bails you out doesn't mean you didn't make a suboptimal deal at the time. So yeah, I think they paid too much. I think they paid too much, and I think some of their rhetoric would bear that out. Anyway, it's a new day, Howard. I don't think we need to belabor that too much. Ganfeng's in a different spot, and I don't. This is where you go to how much of this gets to be Team China. And, we've already talked about the whole geopolitics bit, but China has to have their assets. If they're going to secure assets, the good ones are outside of China. I think they paid what they had to pay. They didn't get Rincon. And was it knee jerk? I'm not gonna put that lens on it, but they paid a high price.
So MinRes and Albemarle are restructuring their joint venture. We discussed that a little bit. What do you think of the impact of MinRes spot pricing spodumene versus Albemarle having long-term hydroxide contracts? Like, I see if Albemarle controls 100% of the marketing, but they're buying 50% of Wodgina tons at variable prices, how could they have fixed for those spodumene tons, maybe not Greenbushes and otherwise, but for the ones, those 50% that they're buying at spot from MinRes, how could they have fixed hydroxide prices? They'd be taking price risk. Aren't they being forced on those tons to have variable hydroxide pricing?
I think that they would be foolish if they didn't. And I think no matter what I've said about Albemarle in the past, I mean, they're learning slowly from past mistakes, but they're learning. And I think they got a great teacher. And I think Chris Ellison's statements, I agree with. He wants to get the most, and when the market turns, he'll adjust. I think that's a paraphrase of what he said, but it's very interesting. But obviously, if Albemarle takes a portfolio approach to the market, they have the lowest cost rock in Greenbushes. So that's a part of their portfolio. Then they have a different relationship, and maybe in the end that deal works out well for them. But I think it's Chris Ellison 3, Albemarle 0, but that's just my personal opinion.
And Rodney, your thoughts on the Ganfeng Lithea, just the valuations being paid in private markets. And I'm always a fan. Like I thought Albemarle, maybe they overpaid, but we should be cheering overpayments as representatives of junior mining companies. We want to see these assets being bid up. So
that's a different question, though, Howard. Excuse me, Rodney. I mean, playing the cheerleader role and high prices, it's good. You asked a specific question. Do I think, did they pay too much at the time? Absolutely. Is it going to work out for them? Absolutely. It's win-win for us, Howard. We can both be right.
Yeah. I mean, again,
I think, Howard, if I were to throw my 2 cents in on that, is if you look at the Albemarle deal with Wodgina, if you look at the Ganfeng, it's guys who pay up for big resources because they believe they'll have the time to work them out and get the payback. It's a meaningful position over a long life. So the question is, if you looked at it, Wodgina was the only one left. I agree, Joe, that the market's going to bail them out. I mean, the lucky one was IGO that did the deal with Tanshi with the Greenbushes at a very good time when things were tough and they took a view. So big assets are always going to, generate a premium because the guys feel, you'll see the likes of Rios and BHP or any of them, if they come into this market, they'll be looking for large resources if they can find them. That's always going to be in vogue for big mining houses.
Well, Rodney, you've often said on the spodumene side, if you can get to 50 million tons, which is not gigantic, but and lithium doesn't have so many gigantic deposits, but there's going to be a lot of that as a threshold are great.
Well, you can do less for DMS. You can do less because you can get it up and running, and we're going to see some happening. But I guess if you have something around that number and you can drill it out. So look at like Global Lithium. MinRes has been buying in. I think that asset could grow probably to something around that number, and then you can always drill out. I mean, Pilbara is doing further expansion drilling now. So once you're up and running, there's often, expansions that can go beyond on the resource to give it life. But, for guys like Albemarle and what have you, if you look at the engineering, and some would say over-engineering of their chemical plants, they need a long life in order to amortize those costs. They cannot do short-term small projects because they spend. I don't know what the final number was on Kemerton. We had an inkling on Kwinana. You need to make them pay. So you need long life, feed to go into that. Otherwise, I mean, they did it in a market that was tougher, but you need to get the payback. So I do think Australia, Canada, there are going to be a lot of these locations where you're going to get those mid-size, where you don't find a Wodgina size or a Pilbara size that'll make commercial sense with Joe's pricing and mine and those of us that see it, stronger for longer.
On the MinRes and Ganfeng offtake restructure, which you mentioned, Joe, I just observed they got $77,000 for their hydroxide. And then I kind of compared that to the $54,000 that SQM averaged, right? So how should we think about that? Is that a carbonate, versus battery grade hydroxide? Is that 54,000? It's an FOB Chile, is the actual price, higher, once it gets into China? Any thoughts on that?
Well, the export price is not the final price in most cases. So there's some delta there, but let's just go back and look at basically what you had is Ganfeng's capacity that was going to customers just got changed to MinRes in the short term, and it was totally spot exposed. So let's just see what the next couple of quarters bring. If they get the same, if that delta holds, and the real question then becomes, I mean, you're constantly trying to create this narrative that supports the hydroxide school of thought, and that's fine, but I think you're generalizing from a small sample at this point.
I wasn't. You're right. I do that, but I wasn't trying to do that just now.
Okay.
I was.
That's how subconscious it's become, Joe.
I was trying to like understand real-time data points in the market, right? For like because you're right, historically following SQM's quarterly numbers is a good benchmark for the price. And here you now have, MinRes saying, here's a hydroxide price real time. And then you have on the spodumene price, the BMX auction. So that was really,
yeah. I mean, that hydroxide price is a real high price. I mean, that's kudos again to Mr. Ellison. But I like to look at data points, but I like to look at results over time and those kind of trends as well. And I don't know if this is generalizing from a small sample or not, but it's great for MinRes to right now totally be exposed to just the price du jour rather than some of the other contracts that are average of 3 months trailing, and some of them have a small discount, and that's not what MinRes is doing. Yeah.
Okay. To the point you just brought up, I'm going to augment that a little bit. Our focus, Rodney, and our primary focus is on kind of Europe and US markets, supply and demand, feeding those markets. And we see it as disproportionately hydroxide focused. And we also think like natural gas has localized pricing, very different pricing, even for a very commoditized market. You might see that emerge. So you might have localized differentials in pricing, and then you might have, your premiums for, the hydroxide versus the carbonate. We've observed your background in Argentina and historic maybe favoritism to brine and your connections to China put you in a more balanced, from a global perspective, viewpoint.
I started out, I was the first guy to sell lithium commercially to the lithium-ion battery space in Japan in the 90s, and it was hard rock. So I don't have any built-in bias towards brine. I never have. At the time, brine was so much cheaper than the dying all beam mine could support. That made sense. But quality-wise, that hard rock carbonate was selected over the Atacama's carbonate offering. And at the time that was Albemarle, because SQM wasn't operating yet. So I don't have any built-in brine bias. And I just want to make that editorial statement. Okay. Going forward, I don't think in this market you need as much as you can get from either side. And I agree with you. I started, before I was in lithium, I was in the natural gas. I used to go to the FERC to get natural gas rates approved. So, I take your point on how convoluted some of those markets can be and localized. All I would say to you is that as long as Rodney's and my prices are close to being right in the time frame we're at, the carbonate hydroxide argument doesn't make any difference. And all of it in a short market, you can't really make a mistake whether you go hydroxide or carbonate, because it's all going to get absorbed by the market. And so we used to spar on Twitter about, hydroxide, whatever, but I was the original hydroxide bull.
Yeah,
even within my own company.
My hydroxide surge was always meant to be it growing faster, and in particular in US markets. I never disagreed on balance. Balance could be 50-50, it could be 60-40, that's all. again,
will
inside
never see-
No,
baseball.
Joe, look, Joe's 100% right, and we discussed this earlier. It's calling all pockets. So whatever you make is going to get taken. I think, but Joe's point is well made. I've rerun my numbers, Joe. So hat tip to you. Your forecast on 2025, I think, is right. I think it'll be 55% plus carbonate. So that was a good call in the face of rising hydroxide. But I think, again, it's very hard to say what models will sell where. I think all of it will get taken. It does come down to, I guess, performance and size of packs and economics. As Joe said, if you want to keep the price down, I guess it will depend. There are things that can happen with the LFP, but carbonate would, LFP would definitely fit the bill if it's cheaper. But I see it as all, things like the Cybertruck and what have you. If it's reasonably priced, what have you, it's all going to be in big demand, which means you need anything and everything you can produce as long as you can meet spec.
And Howard, I actually have, any presentation I've ever done, I always have said from 2015 on, any forecast I did, I said hydroxide is still growing at a faster rate than carbonate. It's just that I believe it was Albemarle, maybe in 16 or 17, said that hydroxide would be 70% of the market in 2025. And I immediately called bullshit on that. And, I could still be wrong, but
not to 25. You
Not
can't.
in 25.
Thank you, Rodney.
No ways. I'd say it's cost. The die is cost. I agree with your 55%, whatever, plus in carbon. Beyond that, who knows? Who knows where we'll be? Who knows?
Okay,
exactly.
Okay. Let's move. Like I said, I want to focus more on
Howard, you did not want this to become a love fest, which is what it's turning out to be. Okay.
I definitely wanted more love than hate, for sure. I wanted to avoid the hate, because there's a lot of there's too much hate. I was going to say that in my intro, I forgot to say this, but I'll say it now. Like Joe is the person you love to hate and hate to love.
That's true of much of your audience and a fair percentage of mine.
So we talked a little bit about majors investing in development projects from SQM Kidman, Albemarle, Wodgina, Ganfeng and Lithium Americas and Bacanora, Lithea, Leo Lithium, MinRes and Global Lithium, Livent and Nemaska. But we've also seen producers buying producers, right? So there was the merger of Galaxy and Orocobre, and then you had Pilbara taking over Altura. I think we're going to see more of that, right? There's who might buy Allkem? Right? Who might buy Livent or even Pilbara? Just speculate.
Oh, it pains me that Livent hasn't been bought. It should have happened. Sure, certainly should have happened at the beginning of COVID, but it should have happened long before that. And I am mystified that a company like Rio, if they wanted to have an Argentina beachhead, why wouldn't you just pay too much for Livent? Even just get the asset, get the core, and use that as a beachhead for further expansion in Argentina. I'm mystified.
I've said the same repeatedly on that, in part because Rio's all over Quebec in aluminum, and with Nemaska, Livent has no hard rock skills. So it makes a whole heap of sense for Rio, which has titanium in Quebec as well. And they have, so I think that we're in agreement on that speculation, that Livent should be taken out. But what about Allkem?
It would be logical if you look at Toyota and you look at how that started. I mean, my first job after I left FMC was advising Toyota Tsusho on the lithium market as they were doing Orocobre. And now that you see the Toyota with Panasonic JV, and you see more, Toyota's been back and forth on their commitment to lithium vehicles, but they're going to have to be all in on lithium. It would make perfect sense for, and Japanese want, they're back to wanting more of a beachhead. I mean, it was JOGMEC, Japan Oil and Gas, that was, and the government that was having Mitsubishi look at this, Sojitz look at this, Toyota Tsusho look at this, and Toyota Tsusho finally took the plunge. I would say it's logical for them to take out Allkem, and it's logical for others. They have a good asset base. I mean, if you look at James Bay, Mount Catlin's in its declining years, like yours truly, but they do have other
Bill
assets.
Lowry, the Mount Catlin of the lithium industry. No, I wouldn't think so. You're more like the green bushes. That'll never, you'll be doing this until you're 90.
Anyway, then, Sal de Vida, I've always been bullish on Sal de Vida. And, would really be good. Maybe Rio takes Livent, and then they take Allkem too, and make a real lithium.
Just on that, if I can jump in there, to my mind, it makes complete sense if you are a mining house major to take an incumbent and all the skills with it before you have a go at this industry.
Exactly. It was a head scratcher with Rincon for me.
Which is why I think someone like a Rio could buy some of the bigger, uncontracted assets that are out there that we all know. Why not? Why aren't they in the Piedmont, the Thacker Pass process, to fund those projects?
They're not throwing big exploration money out there either.
Yeah.
So it's not like they're looking for early assets either and doing the drilling. I mean, Fortescue's had a dip
On exploration, but they haven't found very much.
Yeah, but I'm saying, Rio's, if you're not going on buying the experience and the incumbent, surely then, if you think you can go it alone, you would go something that you can manage, which would be more like moving hard rock.
But Rio spent a ton on Jadar, right? So that was their.
Yeah. But that was more of a boron asset, to be honest. I mean, That was the thing that used to amaze me, is all the London fund managers told me that Jadar was the saving grace of lithium, and it was going to produce 23,000 tons back when I spoke to them. Now 23,000 tons, Joe, that's another rounding error. It was a boron asset.
Yeah.
Well, Glencore was in the press. I remember a few years ago at the BMO conference, I heard that Ivan Glasenberg basically said about lithium, this was like 2018, where they had a track for EV metals, and these investors were looking at these as it was some sort of circus act, lithium and the like. And Ivan Glasenberg, everyone was beating up on lithium. He was just like, if I can't trade it, I'm not going to buy it, right? Like, so he was into cobalt, he was into nickel, but lithium, not trading it, forget about it. But he's gone or is leaving. There's a new guard at Glencore. There's some new thinking. Maybe they come in and maybe they buy Pilbara. They don't typically overpay, but maybe it'll be interesting to see what they do. But I think that's coming for the size of the market has grown. You were saying, Rodney, that the lithium size of the market has gone from 3 billion a few years ago to now almost the size in dollar value as the nickel market.
Exactly. So, it's gone from the bearded lady at the circus to now the front act. So everyone said it's opaque, there isn't there. And, again, one of the things, drew me in early on, with Joe's write-ups and stuff on LinkedIn way back or whatever, is the irreplaceable element, and people just weren't having it. But in the end, I mean, maybe prices change again, but it's still, fundamentally the lithium-ion battery was always going to get the job done. So it made lithium the key element one way or the other. So yeah, we will see. I just find it, look, for someone like Rio's who prints money in iron ore, they need a major, I would have thought they'd want a major asset to move the needle and then get into the industry in a major way to add to their bottom line. The Rincon one, I don't understand, other than it was for sale.
Yeah, that's that. You probably hit the nail on the head. Yeah, it was available.
I've always said that like the top of this market will be when we have a Rio Alcan moment, right? You know, Rio bought the aluminum company Alcan at a very, very high price. That was the top of the last super cycle. So big mining, big companies, if they only kind of come into auctions, you know, if Rio buys Albemarle, you know, at 100 billion, right? That's when you should be selling your lithium stocks.
Well, in 1992, Howard, Allkem was the third biggest buyer of lithium values on the planet. So just to put that into context.
Always appreciate the historical anecdote.
He said with his tongue in cheek.
You mentioned Japan and Toyota. I do notice that like Panasonic in America with these additional plants, they were slow. You know, the Koreans seem to have been ahead of them, but they seem to be catching up quite a bit. Thoughts on that? And then to the point of resource investing, the Mitsuis, the Mitsubishis, the Sumitomos. I mean, it's been part of Japanese and to some degree Korean Inc. development to be funding resource projects kind of globally. So how do you see them as potential participants, you know, in the US and European projects? You know, where's the big Jogmec? You know, the Orocobre got super cheap loans. We're talking about like Jigger Shaw loans, but what Orocobre received from Mizuho was exactly that, 70-30, you know, debt to equity at, you know, 3.5 or 4% interest. But that was funded, you know, by the Japanese. Will we see major Japanese strategics or Korean, like from an LG and an SK perspective in America with these big partnerships? They're a free trade country as well, free trade agreement country as well. And they've spun off. LG Energy Solutions is spun off into like its own entity. LG invested in Tangshi's IPO, right? Where are these guys writing checks into development projects?
Well, let me say this on the Global Lithium-ion Rocks podcast. I believe that it won't be validated this year, but I think you raised two great points. I think Japan's going to come back in a significant way. And I think they have been sleeping a little bit for a while. I mean, you got down to the cathode. There's only a couple. If you went to see the cathode business in Japan, you got down to going to two places, basically, two meaningful places. Whereas Korea, you know, was more focused for a number of years. I also think you've had a switch happen in the last 8 weeks or 12 weeks and I lectured both SDI and LG in Phoenix in not a kind manner for 2 hours each on all their sins of the past in terms of not understanding lithium, being arrogant, thinking they controlled the game. And now I am believing that whether it's just they're so desperate now, they are willing to contract differently. They are willing to do more with respect to lithium than they ever have been. I don't think either one of those will make direct investment in assets, but I think the way they contract is changing. I think you're seeing a sea change now finally in OEM and battery thinking outside of China, where they're seeing this price thing staring them in the face, and maybe they believe Rodney's numbers.
Along that line, you've mentioned GM Livent in a prepay, so that's interesting, right? GM providing funding to a producer for their expansion. You've had Ford do a debt deal, you know, with Liontown. There's still conditions precedent on that. Then you've had Stellantis write an equity check, you know, 50 million euro into Vulcan. You know, so how do we think about that?
Well, I think sometime. No, I mean, some people just don't know how to invest their money.
Well, look.
I mean, okay, it's fair enough. A fair question. I mean, I think from the standpoint of yes, they're internalizing that everybody's wanting to sign up now. I think that's your point. Whereas before,
I'm
maybe
saying
they weren't.
these are very small amounts, and these are coming from OEMs. But OEMs have invested in, GM invested whatever 2 billion in Cruise with SoftBank, and these, like, they spent, like, Volkswagen is in solid state and QuantumScape. They write hundreds of millions of dollars of checks for things which are less critical, right? More risky than this, and they're starting, but it's very small. I mean, there's a $200 million GM Livent, 300 million Ford Liontown, 50 million euros Stellantis. I hope there's a lot more behind it. And you've had the other offtake without investment, right? In a lot of the DLE stories, you have a lot of good projects, right, that haven't done deals yet. Like we talked about it. What's the most likely outcome for advanced projects with uncommitted partners? Like Critical Elements has not signed anything yet. Atlantic, has unencumbered tons. North Carolina with Piedmont, North American Lithium, Thacker Pass, they have not hit the bid on these non-binding MOUs, right? I think that they're in a great spot to achieve very significant valuations and partnerships, and outcomes maybe along the lines are better, than if you said, Rincon was available for sale, like Lithea was available for sale. Ganfeng didn't get it, so they went for Lithea. But some of these other projects that we're talking about are coming available. But do you think that these guys are going to get into mining? You said no, really. They're going to do it some other way, not with equity stakes.
I think there's still a resistance. The car companies don't want to become mining companies. That's clear.
But why would LG invest in Tangxi, but IPO, and not invest in any other developer company?
That's I believe, a relationship thing. Honestly, I mean, look at Korea and Japan. I mean, 3% and 4% cross investments is like, you go out to dinner and you say, hey, why not I buy 3% of your company? And they do. And it's more about going steady, getting married.
Okay,
Joe, one of the things I've always preferred as a possible alternative, Joe, is to have a streaming deal, in which case you make it effectively an asset exposure, but with a financial instrument, and you're not the miner.
Yeah. And I think in 23, you're going to see some creative deals made, and I don't have any specific knowledge of details of that, but I think you will see it. But my whole point is, I think finally some people are starting to get it now. If I was Stellantis, I probably would have made it that 5 million. I'd have taken a zero off that baby, but hey, that is my assessment of what they did. But I mean, it's a fair point that it's small, but what George Bush called it, 1,000 points of light. At least something's happening. And I think you're going to see a lot more in 23. I think there is, and I think the Inflation Reduction Act, as it gets internalized by people and their strategies get set, you may see some moves there. And your Keith and company are in a pretty good spot. Shout out to Keith.
Think so. We talked about big battery, big auto. Well, what about big oil? So you've had most people don't think of Coke as big oil, but they're pretty big.
I don't think a Coke. I think a Coke is big conglomerate with a lot of energy interests.
But they've written now 350 million checks into 2 American projects, and
they've done 1.4 billion in the battery, what they broadly term as the battery space, and it's 2 different entities too. One's the Strategic Ventures, one's KMT, and
they collaborate.
Sometimes they don't talk to each other as much either. I mean, it's an interesting dynamic.
There's actually, by the way, there's actually a third entity I learned yesterday that is like an internal hedge fund, that invests just in companies, just as any normal hedge fund would be, and it happened to be that they invested in Compass before the hedge fund invested in Compass before they made this separate entity made this investment. But I mean, they're making a bet on unconventional brine, rather than hard rock or clay, and they're focused on the US and not anywhere else. So what do you think?
Well,
We both know Coke.
A shout out to Coke. If you want to take a position in the US based Global Lithium, I'm happy to talk at any point. I think Coke is an important part of the US. I mean, look at their investments. I mean, they're more focused on the US, and I love that. And I think they're perfectly comfortable taking risk, and I like what Coke is doing. I think on the other side of this, when you really talk about really the classic big oil, I expect to see activity by a couple of oil companies that is more lithium focused, and it's not battery space and like Shell, we're going to focus on recharging or something like that. I wouldn't be shocked to see a move by a very large oil company in before the end of 23.
I'd be shocked not to see it.
Okay. Our shock levels are different.
Yeah. No, I mean, you had Exxon, it would have been good if they put an extra zero like Stellantis did, on the E3. They put in 5 million. That's small, but they know that asset's embedded in their history. And Schlumberger is not really big oil, they're oil services, but they invested in Energy Source. So you're seeing, and Pure Energy. These are venture capital, tiny investments. It needs to be hundreds and billions of dollars.
Schlumberger has a plot of land not 15 miles from where I'm sitting right now, and they were talking about doing a lithium metal deal 4 or 5 years ago with a friend of mine. So yeah, Schlumberger's been nibbling around the edges for a while.
Yeah. So we talked about, majors investing in development companies, producers buying producers, but you also have this concept of, the multi-project juniors, developers investing in and buying developers. So you have Lithium Americas, actually started Lithium Americas merged with Western Lithium, right? And since then, that LAC bought Millennial, they've invested in green tech, they've invested in Arena. Meanwhile, Piedmont, took advantage of, their post battery day boom and at the bottom of the market with Sayona, and then with Atlantic. And they've now, both of these companies are multi-project companies with a flagship. When I look at Lithium Americas, who I know for a long time, former clients, not currently invested, and I know it's a favorite of yours, and Piedmont, which I do advise, am invested. And so just, there is a little bit of competition between us, like fans of these two companies. Like when I think about it, Minera XR is going to come online and be generating, some revenue and cash flow in 23, 24. And if you look at it, LAC has 49% of 40,000 tons, right? I don't know what the capacity is going to be of carbonate. And then Piedmont is going to have 50% offtake, 113,000 tons of spodumene from North American Lithium, starting that up next year around the same time. So which project, Minera XR's carbonate to LAC versus Piedmont's spodumene, from North American Lithium in 2024 and 2025, which is going to generate more cash flow for each company? The question for both of you.
It depends on the ramp, but LAC's going to have, by your maths, when it's at full capacity, just under 20,000 tons. So you can take whatever margin and cost you can on that. And Piedmont's going to have something in the order of 15 to 20,000 LCE equivalent on that offtake. But even if Minera XR is doing non-battery grade, it's still going to be getting whatever. I don't know what the commercial terms are with Ganfeng, but
market price.
So if they get market price and we're still at 60 and it costs 10, they make 50. So it's $50,000 a ton on all of that. So it depends on how quickly they ramp, but they should be able to get up to over $500 million in EBITDA pretty quickly.
Half a billion.
Yeah, I mean, depending on how much they do. I'm saying if they can make roughly $50,000 a ton and they get attributable 10,000 tons by then, that's your number. And Piedmont on the 113,000, assuming they're making a bit over $4,000 a ton, still at that point in time will be very similar. Will be about $500 million EBITDA, depending on how quickly you ramp that up. So a very similar number.
Lack's deal structured differently because the Sayona deal is 130, the greater of 113,000 tons or 50%. So if they only do 115,000 tons, Piedmont still gets their 113,000 tons, if I understand that agreement correctly.
That's correct, but it won't be that low.
It's a heads I win, tails you lose. I have some knowledge of that asset, and we can talk about that too. But they're in a good spot, no doubt about it. But I like Rodney's analysis
On Lack
of the Lack deal, and I am going to accept Rodney's answer as my own.
Okay, that's great.
I'm going to say Lack for the win. But here's the thing: both of them are gonna. There's a lot less complexity to what Sayona's doing than what Lack's doing, so it may happen faster. If you want to ask me over from time of declared start in the 24 months from time of declared startup for each one, I'm with Rodney on the number, so I'm going to pick Lack.
I want them both to win. I'm fans. I have a lot of friends at Lithium Americas, and I'm just,
it's all
the market doesn't reflect. The market reflects certain things in Lithium Americas. It doesn't yet reflect the same from the Sayona, North American Lithium asset. Minera XR has been known for a long time. North American Lithium is not known as a near-term producer, and it's reflected in Sayona's stock price. It's not reflected in Piedmont's stock price, in my opinion. But let's move on to final question. Where is the best bang for your buck if you were to invest capital in the sector right now and you can't pick Lithium Americas? Joe and Rodney and we can't pick Piedmont. And you don't need to mention a specific company, but where would you, if you want to, you can, but geography, stage of development, producer or non-producer.
I mean, it's essentially what's not reflecting fair value at the moment.
Yes.
I mean, that's, I guess.
Yeah, that's a tough question because, my overweight in Lack is at 2 and 3. And it's a much harder decision to buy at 28 or 30. So I'm glad you took that off the table. And again, I own a fairly significant amount of Sigma shares, and it was easier at a very low number than it is at a very high number. So you have to. My whole point is you have to look at the emerging guys, and yeah, I own some GL1, I own some GT1. MinRes is tougher because it's not a pure play lithium, like SQM's not a pure play lithium, like Albemarle's not a pure play lithium. But I've been buying MinRes too, and it made me happy when he said, "Hey, maybe we'll go public." In New York, or he didn't say it, somebody said it. So you got to look for. I'm looking for small guys. I've been trading in Arena for a long time. If it goes to 30 cents, I buy it. I sell it at 38 cents, and do it again because it's very volatile.
So it sounds, if I read that correctly, you're buying and holding new hard rock in GL1 and GT1, and you're treating Argentine brine more speculatively as a trade.
Well, I mean, I don't think having a 6-figure position in Lack is speculative trade. That's a core position. I mean,
that's different.
Yeah.
I'm talking about Arena.
Yeah, no, I mean, and I like the Randalls. I mean, I mean, sometimes you invest it. I mean, there's a lot going for it, but
Yeah.
I'm not going to develop a huge core position in arena. I'm going to trade arena,
Right.
just because that's the kind of market it is, and I got a big enough IRA where I can do a lot of trading in my IRA now. So, yeah.
Okay, Rodney just I don't know if Rodney conveniently fell off. So I'll fill the gap with my
speaking for Rodney, I'm a Piedmont bull.
Well, he's not allowed to say that, but thank you for saying it. But you didn't say you're buying Piedmont. That's interesting.
I think what you just articulated is, I'm still waiting on. It's not an easy. I don't think it's grossly undervalued right now, because I think there's too many question marks. But I take your meaning with, even if Sayona only did 115, they get 113,000 of it, and they can start selling it, and that's a lot of cash flow.
For sure.
Yeah. So, Howard, I may take your stock tip.
I can't say Piedmont, but and I won't. We do have a bias toward hard rock, early stage companies, but to not do disfavor to our multitude of clients by picking one of them, I will mention two non-clients that I've done my Freebird lithium about, and that's AMG. Because it's a diversified company, but I think you're getting lithium there for free. They are producing lithium, and they're trading like at a 3x EV to EBITDA. They've upgraded their guidance, 3 or 4 times in the past year, less than the past year, and they have a credible downstream, hydroxide strategy. They don't trade like a lithium stock. And secondly, I've owned Mineral Resources for a long time, and I've bought a little bit more, but I very much believe a spin out is a high probability. It makes too much sense, and the market's not pricing that accordingly. And I think because they're focused on hydroxide, being correlated to hydroxide, even if they're not making the hydroxide themselves, should give them a specialty chemical multiple on those tons compared to maybe a traditional mining multiple, which they get for iron ore, or their mine services business. So, and Chris Ellison owns 16% of the company, founder owners. I want to do a bit more work on Ganfeng, because as founder owners, that stock's been very weak for a while, and I think it's because they're still perceived as more a refiner, and the shoes on the mine is where the margins are. But I haven't run it's very interesting to see Tangxi rose aggressively into their IPO. It looked a little bit like manipulation just to kind of get that deal done, because they were standing, nothing was going up. I mean, also AMG talked about spinning out their lithium, but then they said they weren't going to do it in May because the market dropped. At the same time, Tangxi was the only one who got off like a 1.7 billion. Anyway, Rodney, you're back. I don't know if you heard everything.
Please repeat the question.
No, I just froze. I did hear the question. So Piedmont's off the table, but as you know, I've done work on that, and somehow Tennessee and North America, the North Carolina projects are trading at negative in the share price based on my calculations. We've just had the PFS of Atlantic come out. I think when that's drilled up to full resource and you take even, well below what are implied in Joe's numbers or mine, I still think that the NPV for Atlantic is $1 billion. So that puts it at over 2 Aussie a share, or about 3 times the pound price now on Atlantic. So I like that, for me personally. Surgeon General's warning, do consult
Not
to them
investment
and so on.
advice,
So,
and they're a client. Yeah. I said I wasn't going to recommend any of our clients, Rodney, because I didn't want to.
Other than that, there's no
okay,
issue.
well, in terms of Joe's ones he mentioned as well, we like that, and green tech. So I think if you've got the higher for longer, you've got the developers. We're in agreement with Joe. The developers is where the money's at because they've got time to get up and running, and I think still capture higher prices. So nothing's going for free, but I think those ones, if we're not allowed to say our clients, then the ones that Joe mentioned, and I also think, Arena, I mean, if you look at the play on that Salar, it's definitely at some point in time will come home to roost. So that will make sense.
Ship brine, you can do it really quickly. And there is
one former client, not a client now, but just going to that Rincon and Lithea purchase, like the disconnect, like lithium power in Chile, where they're trading at compared to where Rincon and Lithea traded for. I just see a public-private, disconnect there. I mean, that's a relatively advanced, high-grade project. So anyway,
I think just as an overall view, for my money's worth, given my past running a small mining book, in a sort of super cycle, is if we think it's higher for longer, and a lot of guys are talking. I mean, Chris Ellison. I mean, you look at those numbers. So if we're talking to 2030 and beyond, if we're going to still have a tight market, then there's a lot of money still to be made at the end of a drill bit and feasibility and so on with the smaller assets, because you've got time. So I do like that end of the market.
Ken Brinsden just joined, Patriot, like out of nowhere. No one ever heard of this company. If you look at our scoreboard, there's so much movement, within that scoreboard on a quarterly basis, a yearly basis. You look. So, and there are lots of new names. That scoreboard has grown enormously.
Look,
so,
Patriot is, they could be potentially sitting on 100 million tons or whatever it is they think they are, and others, and those are the sort of, if you can drill up to that size, and the brine, if you can get up to big tonnage, then those are the assets that the outside the industry players are going to have a look at, in my opinion.
Okay, final comment from me here is that if you are an auto OEM exec or a battery auto OEM exec, I recently heard from a new client of ours, who attended Phoenix, that, they've asked around, and the only people, worth listening to, they said, were Joe and us. So if you are among that group, we're not the big banks, we're not the McKinseys of the world, but we've been right for longer, and you should be calling us for advice, and you should be deploying significant, if you believe in the stronger for longer, as we all do, and the market is not pricing in the prices you both expect over the next few years, then this concept of higher love for all of the companies we mentioned, whether or not you think, LAC or Sigma is at too high a price, for a fresh buy, it's likely going higher, as Pilbara, is. So, Albemarle bought into Wodgina. We thought that was a rich price, and now it looks great. The market for lithium, it is the limiting factor. It is the irreplaceable element, and it's a great place, I think, to continue to make life transformational wealth. If you're a retail investor, if you're an institutional investor, and then strategics, again, should just listen to the experts who live and breathe this 24/7.
I don't think it's out of the question to add our favorites to anybody's portfolio, and that's not investing advice. It's just that when you look at where's the big percentage bang going to be, it's obviously at the undervalued end. So my strategy is to continue to acquire my cores, but to take the plunge And maybe I'll just buy a company that's based 22 minutes from where I'm sitting.
that is one of the crazy disconnects in this market, is that not only Albemarle and Livent have, America's lithium is in North Carolina. The best of America's lithium is in North Carolina, including yourself. And for like the developing company right in your backyard. Yes, Yimby. Yes, in my backyard, Joe Lowry. Piedmont Lithium. Anyway,
well, thank you for having me.
The final thing is on just be careful though. Bull markets, there's a lot of crap on that scoreboard, and Rodney and I have interfaced with a number who are increasingly reaching out to us on LinkedIn and wanting to be on the podcast or wanting us to kind of represent them. And there's a lot of overvalued crap that you need to be careful about. And
when you get people reaching out, because I have the same thing, is it usually their PR person or is it usually a principal? It wants to get a company. Yeah.
It's often a principal, but the principal is like, I was doing gold, I was doing this, and lithium's hot, and I got this property, I'm gonna back it into a shell, and I got this acreage, and what?
Yeah.
And then I look at it and it's a $50-100 million, kind of entry price. And anyway, so just be careful. By the way, we don't give financial advice, but if you subscribe to us as a Patreon, we do offer, like Joe does from time to time, one-on-one phone call time where we could talk through some things that we don't always talk publicly about. We put a lot of information into the public domain for free, but we hold back, the best stuff for paying clients, as you do, Joe.
Yeah. Well, thanks for having me, Howard. To your listeners who didn't want you to have me on, I hope it wasn't too painful. And if it was, you can just send me more hate mail at globallithium.net/content.
Almost everybody was universally positive.
Oh yeah. I mean, a lot of people wanted this to happen, and I'm glad it did. And I think we have proven we're civil.